Thank you for joining the webinar today. Those of you who couldn't jump on live, that's fine. We're going to have a recording of this that we'll be able to share. My name is Nathan Quinn from Carpentry Australia, and we're with Mr. Grant Thomas. Welcome, Grant.
Thank you.
Thank you for taking the time.
Pleasure.
So this webinar has been put together in conjunction with Grant because we want to add as much value as possible to our members. And one of the key areas that we consistently get feedback in is around the finances and some of the challenges around keeping up to date with all the important things when it comes to running a business. Because many of our members are fantastic on the tools and love working with customers, but it's the financial side and the record keeping side that a lot of people often tip over. So we're going to give them a bit of a solution and field a couple of questions. So right from the get-go, we're going to let you know that obviously you can ask questions in the chat. So there's a little chat box that you can put a question forward in, and we'll be happy to field them toward the end of the webinar. And finally, if you have a burning question that you really hope to get out of this and you're worrying that we may not hit it, not to worry, because Grant is being very generous with his time, and he's going to actually spend a period of time one-on-one with anyone who attends to help them answer any questions and come up with a bit of a personal plan as to how they may be able to move forward. So I just want to say that in case there's anyone who might worry about that. All right, so let's get started. To kick us off, we're going to have a bit of a look at a refresher on why we're doing this. So we've got three key pillars at Carpentry Australia, which is bringing people together through our community collaboration, a development pathway, and support and advocacy. So this webinar fits right into the development pathway and making sure that people have the skills and know-how to be successful. Whoops, wrong way. Okay, so for those of you, there's a couple of people who have jumped on today who are not members. So we've been around since 2012, and our objective is to provide as much value to the industry as possible and to keep the hammer swinging for longer, which we'll see in a moment. So our key, whoops, get rid of that. So we've got our key brand values on respect, trust, innovation, and integrity to make sure that we don't let anyone fall behind and we supply the best possible support as we can. Now, this is a key area that we're going to be delving into. So we talk about the life cycle of a carpenter, and those of you who are jumping onto this webinar may fit into a number of these areas. So whether you're an apprentice starting out and you want to understand what you need to do for your tax return, whether you're newly qualified, Grant's going to be talking about setting your business up, whether you're a subcontractor on wages, business owner, or even a builder. The bookkeeping and the finance side varies in complexity based on where you're at, and that's what we'll be covering today. So let's get into it. All right, so the key topics Grant's going to be covering today around getting started, record keeping, employing staff, and understanding if you need a bookkeeper and what value that may bring. So the way we're going to do this is I'm going to play the role of somebody who is tuning into the webinar to make sure that I ask the questions that I hope that are top of mind for you. So it won't just be a talk fest, it'll be to and fro to make it as valuable as possible. All right, ready to go, Grant?
Let's go.
Okay, so right from the get-go, mate.
Okay, so look, starting a new business is an exciting time for everybody. It's very important to take a moment or two to consider what is your business plan. And that's something you may have something in your head, but there's actually a lot of documentation templates out there available for you to actually put together a written business plan, maybe just a one-pager, maybe multiple pages. But it's important to define what your business is. So some of the topics would be things like, what is your actual service offering? What are you going to do? You're going to be a home builder, a commercial builder, a shed builder. Perhaps you're doing renovation work. What is it you're defining what to focus on? Very important to define that up front so you can spend your energies in the right space to develop your business correctly. Then you need to look at what your competitors may be in that space, how they're pricing services. how you differentiate yourself in that space. So it's pretty important to articulate that for yourself.
I think that's a good one as well, Grant, because a lot of people who may be struggling with the amount of work coming through, it can turn into a race to the bottom because they go, well, what's John charging you? Look, I'll do it at a lesser cost. And yes, you may win work in the short term, but there's repercussions for that later on in terms of not knowing what your expenses are and being able to plan for that.
That's absolutely right, Nathan. That's what this business plan helps define. What are you offering? What price you're charging per hour or per job? So you know how to put together your quotes in the right way, so you don't race to the bottom and end up finding there's no margin, no profit for you. So it's a very important part of the process, and that leads to further process here in terms of what you do in a business plan. You need to define what your goals are. What do you want to achieve in the first 12 months of your business? What do you want to achieve the next 5 years, 10 years? Then how do you want to market your business? Now, most times it's quite simple. You may be simply through word of mouth, but you may want to go a bit heavier than that. But you need to define what that might look like and also what that would cost.
Yeah,
really important. But crucial to all this stuff is, what do you want to get out of this? It's all nice to have a business, but what's your personal goals? You want to either retire in 10 years' time or 20 years' time? What is that goal you want to achieve? How much time you want to spend while you're running your business to have time with your family and friends? So it's all too easy. It's so consumed in a business that you haven't got time for anybody else, and it can be quite a big challenge. So in planning your business, define all those aspects and how you're going to achieve these things.
So to jump in there, Grant, as well, I think it's important to confirm that you need to have a really clear plan as to where you want to go, or else you'll end up doing 60, 80 hours a week. You'll be stressed, you'll be doing your book work, you'll be doing your marketing, and there's a lot to do. So having a plan to say, right, well, I want to have people who can be on site for me while I go out and win work, or am I going to have a certain setup that allows me to be more hands-off and more of the management side? Why is it important to know that right from the get-go?
Look, if you don't have some sort of plan, that's a super classic thing. If you fail the plan, you plan to fail. And that's you wander around aimlessly, jumping from job to job, but not really getting anywhere. Yeah. And so by having the basic plan in place, you know, if you achieve those things, if you achieve that with that job, you know you're making a certain amount of profit. So then you know you can go on the next job knowing you've got enough money in the bank to actually do that. So it helps to the continuity of your business. And also your mental strength too, because it is stressful and it's tiring at times. So by having a base plan up front, you know where you're heading, as opposed to scrambling ahead each time, what I'm going to do next. You know what you're doing.
And with your goal setting as well, it's not just broad goals, Grant. I think it's about saying, well, I know how much money I have to make in order to fulfill that need around my equipment, around my wages, around my profitability, taxes, all those sorts of things.
Absolutely. It's crucial to understand in your plan what you're going to invest money on. It's also easy to say, I'm starting a business, let's get a new RAM ute. Fantastic, let's do that. But we forget to realize that's going to cost you $120,000 and the repayments on that are huge. So you're lumbering your business with a lot of costs before you even start. So it's really important to focus on having that plan in place so you know what your business will justify spending up front and engage that plan as you move forward.
Yeah, excellent. Okay, so building on from that, Grant, there's a couple of other key things as well that you can sort of elaborate on around the resources we were talking about.
Yeah, so the plan will help define how you're going to grow your business. So what staffing levels would you need to have in place? What sort of equipment do you want to engage? So if you're doing big construction, you need big equipment like trucks and lifting equipment and so forth. And you also need software in place that's going to help to manage your projects on the way. We'll talk more about some software later on. But all these things also come with risks. So it's valuable to actually understand what those risks may be. They may be just your competitors' risks to you. Maybe expose yourself to contracts where the price of the material is going up quite quickly. So you need to be careful about how you engage in some of those projects. That all wraps up into a budget and a financing plan to work out, well, if this is how much it's going to cost you to do these things and you've got only so much dollars, how am I going to finance that difference? So this plan will help define that for you. And importantly, through the process of all this, have a system in place, a software in place that helps you track your performance, how you're going in progressing against that project plan. Yeah, absolutely. Because there's horror stories you hear about people who don't think about this from the beginning, and they'll remortgage their own home to fund a project and hope it all balances out.
And that's exactly what we're against. We want to make sure that you can have a secure and rewarding future and not be stressing week to week.
Absolutely. We work with very successful clients now, and they all have the same thing in common. They have a plan, they enact it, and keep it all the way through.
Yeah, you need to have someone in your corner. Okay, so as we spoke about it a little bit earlier, we were talking around depending on the stage of the journey you're at. So there's got a number of different people who have registered for the webinar who are at different stages of their journey. So we're just going to briefly touch on this. If you're someone who's just starting your business, what are some of the fundamentals? Sure.
Look, certainly you need to find who you are as a business. So what's your business name? You most likely will have done that. It's a hard thing to find a right business name, but make sure you get it registered because people can steal that name from you. So very important to do that. But as a business, you also have to have an ABN, an Australian business number. Quite easy to set one up, but it's important you have that from day one. So your invoices have the ABN on there. In running a business, very important to separate your business from your home life. They're two different things. So you don't want to mix up your business with your personal accounts because you don't know where you're up to. Whose money is that? So it's important to find the money for your business goes to a separate account and you run it through that process. Ideally, have a second account, and that's to put money aside for the incidental things that happen, like your tax, your BAS, superannuation, and other aspects of the business that happen infrequently through the business cycle.
What happens, Grant, like a lot of people, I imagine, say, oh yeah, I'm going to get around to all that. And then they've sort of lumped everything together because maybe, this personal expense might go toward my business and it becomes very jumbled. What's the consequence of that?
Yeah. The challenge is from a tax office point of view, they start to question, well, is that really business or is it personal? And they'll make the rule themselves. No, that's personal, not allowable. So you can lose a whole lot of deductions in your business straight away. But if you're showing that your business is completely separate, there's never a question about whether it's business. It just boils down to what type of expense is it.
Yeah.
And then you can provide your documentation, like an invoice or a bill to show that's what it was for. Okay, fine, off you go. Tick, deduction allowed.
Yeah, beautiful. Insurance?
Insurance. You've got to protect your business from being sued. So it's important to have a level of insurance for your business before you get started, really.
Yeah. Okay, excellent. So they're all the fundamentals of getting started. Okay, so this is quite often an area that a lot of people struggle with. And we actually formed our relationship with yourself, Grant, because people were asking us questions at Carpentry Australia to say, who can you recommend for this? Who can you recommend for that? Yeah. So we were fortunate to meet quite a period of time ago, and now you work with a number of our top champions at Carpentry Australia as well, who help us with our Helping Hand Days and our big teams and some small teams too. So as we said at the very beginning, a lot of our members are very passionate about, the craftsmanship and the hands-on skills. And where a lot of frustration and struggle comes in is with the record keeping and balancing everything. A lot of people say, oh, well, I don't want to pay, so I'll get my wife to do it. Then your wife, you start arguing. It's a recipe for disaster. So let's chat a bit about these factors.
It's important to understand how to get your records or your transaction recorded from the very beginning. Unfortunately, we often do see it where clients leave it till 6 months down the track. And the problem with that is that when you start, then go back 6 months to track what you're doing. What's that transaction there? What's that transaction that we don't know? We're losing track of what's going on. So we always encourage businesses when they start a business, start your record keeping systems at the same time. Engage your bookkeeper is a good part of that process. But what is a bookkeeper was an accountant is sometimes a bit hard to understand. In simple terms, a bookkeeper will get all your transactions recorded in a system, and also ensure you get your BASs lodged on time, and this whole of other things will also help you get done on time, so you comply with the tax laws and other regulatory bodies in Australia.
Which can be a very time-consuming
it can be.
To deal with.
It can be, absolutely. And look, rarely when you're doing this sort of work, you're doing it yourself, it's after hours, and that's very hard to do.
Yeah.
And that's why things fall behind. And unfortunately, no one cares about that. The tax office will not let you go. They will chase you down and make sure you get it done. So very important to get started early in the process. And that's when also your accountant comes in the back end of that. Once your bookkeeper's done their work, then the accountant open up those same set of accounts and start your tax return. So that's where the difference between the two. Bookkeeper does your BAS work, accountant does your tax return.
Yeah. And we've actually been fortunate. Jake, our CEO, has worked with Grant on really establishing a key chart of accounts that gives vital information to carpenters as members to be able to know where they sit, so it's not messy. Because quite often we hear people say, you know, I pay my accountant and all I get is my fees. So what often gets missed is, you know, how am I tracking? What do I need to change? So it's vital to get that right.
That's right. So through the record keeping the bookkeeper does for you, you'll have this profit and loss report that shows you where your income's come from, what type of jobs you've been doing, and then where the money's going to, what wages have been spent, what contracts you're paying money for, what supplies you've been paying for, all these different things. So you can see it on a snapshot on a one-page document where the money's coming from, where the money's going to, and then you can start drilling down and say, well, why are we spending so much money on fuel, for example? And you can start analysing, well, how can we do things differently to cut some costs out of your business?
Yeah, so you can make better decisions real time, as opposed to waiting at the end of the year and lodging basses or lodging returns and going, how was I not aware of this?
Correct. Yeah, that's right.
Okay, so superannuation, this is a really key conversation, Grant, because we go to a lot of trade schools and there's a lot of young people who maybe are not getting paid superannuation. So for an employer who's watching this, who has a lot of balls in the air and maybe they're not paying or not up to date, what's the risk there?
Yeah, look, the superannuation is something you have no choice but to pay. If you're running a payroll, the tax office knows you're running a payroll and they know whether you have or have not paid the super on time or if you have not paid it at all. We've got clients that have failed to pay on time. The tax office doesn't buck around, they simply send you a bill. Here you go, here's a fine, you haven't paid it on time. Or if you haven't paid at all, I'll send you a bill for the interest that you haven't paid, plus they'll double the bill of what you normally pay for superannuation. So you don't want to avoid this one. It's very important to keep the compliance on time for paying superannuation always.
Okay, the last one's probably a big one because sole trader versus company. Like, I think sometimes there might be a misconception that if I'm a sole trader, it's easier, it's quick, and then company there's some more moving parts. How do you separate the two?
That's a good point. Look, fundamentally, it's about protecting yourself. As a sole trader, you are exposing yourself, your whole family, financially to something going wrong in your business. So, of course, we never want to think that, but there's always that risk. So by having a company in place, you have limited liability. That is, the company takes the liability, you don't. So if something goes wrong, your company may be exposed, but not you necessarily personally. So it's important to consider when's the right time to do that. I'd encourage you to talk to your accountant about that. It's something the accountants do very well to define when's a good time to do that, change from a sole trader to a company.
So usually it's aligned with the amount of risk as well, the size of the jobs you're doing.
Absolutely, yeah. So things like something like around about $500,000 turnover. If you employ staff, that's probably a trigger straight away. If you employ staff, I'd encourage you to always talk to your accountant about considering opening up a company to reduce that risk, because your staff member can become a risk to you as well.
Yeah, and we're going to talk about employment and staff a bit later as well, because a lot of people want to grow, but then they think, oh, well, crap, what about all these risks? Is it worth it? So you need to have the right people in your corner. Okay, so record keeping. You know, gone are the days of just stuffing all your receipts into a bag and then fading and not being useful. You need to actually get things in place from the get-go.
That's right. Look, the technology has come a long way. And look, it's now very interactive, interacts with your bank, so that when you do your transaction to pay your bills or your client's paying you, the money hits the bank account and that transaction goes straight into your technology straight away. So it's all there ready to process and handle. So it cuts out all that manual keying of data. That's all gone today.
So are you saying that if there's a consistent record that comes through that has the same title, that automatically speaks to the software?
Absolutely does. So there's rules you can write in there to actually speed up even further. So you can go click and post a whole series of transactions very quickly. So you can potentially saving, if you're doing it manually 10 hours a month, you can probably doing 2 hours a month with a technology in place.
Yeah.
And we always recommend Xero as the technology there. It's a simple solution for that space.
That's the one you recommend for the guys you work with?
We've got well over 300 clients on our books and they're all on Xero. It's the most simplest software to use. We find clients that we bring on board always say the same thing. This is so easy compared to what they've used before, or wow, I don't have to do this work on paper anymore. It's always a time saving to them. And it's a comfort of the fact that data is there in the cloud, it's quite safe. And the accountant can see the same data as well. So it's very universal in how it can be used for your business and for your tax obligations.
Yeah, and records and documents, these next 2 points are one and the same. What do you mean by that?
Yeah, so transactions need recorded. So the software does that recording for you. On top of that, though, there's documents that come along with that. So if you're paid for materials, you can attach that document, that piece of paper to your transaction in Xero, and you don't need the paper anymore. So it's an image that document's held together in one place. And you call it up next year, the year after, it's always there. So it's a great record keeping for permanent records for yourself and for the tax office as well.
Yeah, and before we went online, we were talking about this last point around how often should I work on my accounts? Like, is it something that I need to have someone full time? Or a lot of people make the mistake of seeing it as a bit of an embuggerance to go, oh, it's the end of the year, I'm going to have to get organised.
Yes.
And the less organised you are, the more painful it is.
Yeah,
so what are some simple rules of thumb that you have?
Look, we tend to encourage at least once a week to have a look at your accounts in one form or another. If you engage your bookkeeper, they're going to do a lot of the work for you, but there's always going to be something they're going to need from you. So it's important to engage them on a weekly basis. Why? Because there's some transactions that aren't obvious when you look at a transaction coming through the system. And if it's 3 months later that question's been looked at, no one's going to know what it is. So you're losing track of the knowledge, and therefore that could be a very important piece of information. And if it's something as big as like buying a car, for example, or a ute, you've got to go back and dig that paperwork up again. You're burning more time for yourself. So it's a needle in time saves nine. It's the same game every time. So it's touching once a week is always a best way of managing your accounts.
Now, an important example that we were speaking about again a little bit earlier in our preparation was, I think sometimes people have the assumption that, I'll just not do anything about it. I'll keep making money, and if I get a phone call, I get a phone call, but who cares?
Yeah.
So what's the example you shared before?
That's a great example. So we just met a client only a week ago. He's got 6 years worth of data he has not recorded at all. And up front, we thought, well, that's strange. No one's had any comment to you. Well, once we dug a bit further down, sure enough, he had plenty of letters. And we've now had a look at his tax portal. He's been billed $17,000 in fees, and he hasn't even lodged any BASs yet. He's got 25 BASs lodged in 6 years worth of tax returns. Once those get lodged on top of that, the tax office is going to charge more fines and charge interest on top of that for not paying on time. He's going to be up for a couple $100,000 plus in behind taxes. It's a disaster.
So ignoring it doesn't make it go away.
You can't avoid it. Taxes are inevitable in business. You can't avoid it. I'll catch you eventually.
But this webinar is not all about doom and gloom, Graham, is it? We're going to talk about solutions.
Not at all.
Okay, so second part of record keeping, some of the key dates we need to know.
Yeah, key dates. In business, you'd know they've got to do BASs. So the next BAS coming end of year is the 26th of July. Your BAS, business activity statement, needs to be lodged. And that's your GST, what you've paid out in bills and what you've collected from the invoice you've sent to your customers. Now, if you use your bookkeeper, you get an extra 28 days to lodge your BAS. Very handy thing to have. Superannuation, if you want to get a tax deduction this financial year for any superannuation, particularly for yourself, I encourage you to get that paid before June 30.
What do you mean by a tax deduction for your superannuation?
So superannuation is another expense in the business, but unless you've paid it, it's not deductible in the year. So you probably most importantly to have a chat with your accountant about that timeline, because there's a whole lot of issues around your businesses that need to be considered in that discussion. But certainly, if you don't pay by June 30,
Jesse, no problem, mate. Thanks for jumping on. We'll pass you on the recording. Keep going, bro.
Thank you. You don't get a deduction unless you lodge and pay that tax, the superannuation by the 30th of June. That's a key part to that.
Yep.
And then you've got your tax returns. If you're doing your taxes yourself through MyGov, heaven forbid, it's a hard job to do that yourself, but if you do, you need to lodge it by the 31st of October. But if you're using an accountant, you've got a whole lot more time.
Beautiful. Okay. All right. So this is the big one. People want to grow their business. It's exciting to have something you can look at and be proud of.
Yeah.
But I think there's always a balance of excitement of growing, but then the nervousness and the more responsibility. If you haven't got your ducks in a row, there's more moving parts, more can go wrong.
Yeah, absolutely. And look, In engaging a team member to your business, once you've defined who they are, what they're going to do, what hours they're going to work, and what pay rate you're going to give them, it's very important to wrap that up in a document, in what's called an employment contract. Now, CA, as a member, will give you access to templates, which are really handy because they're quite a complex document to produce yourself. Otherwise, there's a whole lot of legal pitfalls you don't get that right. And we'll talk a bit about Fair Work Act shortly, that will have a lot to say about an incorrect document. So that's something really important that's compliant already because CA is providing that document for you. In employing a staff member, you need to get their records onto Xero. So there's a whole lot of piece of information you need to collect from staff to get that all started.
Well, their contact information.
That's right, like contact details, date of birth, their tax file number, some simple things like an emergency contact. If something goes wrong on site, you need to know who to call. So those sort of simple things are also in there. It's a full contact record for your staff member. Then you need to do a tax declaration and get that signed by the staff member.
What do you mean by a tax declaration?
Yeah.
How's that different to like a tax return?
That's a good question. So it's a bit of a painful thing in some ways, but it's an online document you can send to your staff. They need to fill it in. It just details their name, address, the tax file number. It declares that they are who they say they are, and puts in some other things like, do they have a HEX debt or other types of tax arrangements that need to be advised. So when you run your payroll, you're deducting the right amount of tax for that staff member.
Yeah.
So it's quite simple. We can actually show you how that works, but it's an online form you can use. The tax office provides for you.
Yep. Beauty.
Then the last one's your superannuation. So you need to know what superannuation fund you're paying your staff. Now, if they don't have a super fund, you need to set up a default super fund for the staff members, so that when time comes to pay the super, you'll pay it into that default fund.
Now, we spoke about this a little bit earlier, Grant. So we often go to a lot of trade schools, and there's apprentices or young people who maybe they go, I'm not getting paid super, but I'm not going to say anything because I don't want to put my job in jeopardy. What happens if I'm an employer and I've got a few apprentices and some people and I just don't pay the superannuation? What's the consequences?
It's a really good question. So reality is these days, when you run your payroll, it's lodged to the tax office or as part of the process using software. You have to do that. Now, by doing that, the tax office knows who you've paid, what tax has been deducted, but also what superannuation is payable to that staff member. They'll also know whether you've paid it because they get a feed in from the various super funds to say, yes, the payment's been made or it hasn't been paid. The tax office then runs reports and triggers, you have not paid super for this staff member. They don't even ask questions anymore. They're sending businesses a bill up front. You haven't paid the super on time. Here's a fine. Bang. So you just can't avoid it anymore. You can't hide. So it's very important to keep the timelines, keeping compliant with that, to pay the superannuation on time every quarter.
Beautiful. Okay, so getting into some of the Fair Work side of things. So this is really important to get it right.
Absolutely. So we talked about the employment contract. That defines a lot of things around what the Fair Work Act talks about that you must comply with. And they're not complex necessarily. They're everyday things you'd expect as an employee. Your maximum amount of hours you can work is 38 hours per week. You need to be giving a staff member 20 days of annual leave and 10 days sick leave. There's lots of other things as well, but they're minimum standards that the Fair Work Act always talks about. You can always pay more above the various award rates, but these are the minimum standards you've got to comply with. And if you do that, then you're protected under the Fair Work Act. If you don't, that's when the Fair Work Act becomes very aggressive towards you. And if a staff member complains the Fair Work, you can fall in trouble quite quickly.
And we were saying before, because I think it's important for everyone watching this, if you have someone you employ and there's a dispute on the amount of hours they're doing and there's no record of it, what happens to the employer?
Yeah, the fundamentals are, as an employer, you are obligated to keep records. And if you say, sorry, I don't have them, I've lost them, then the rules straight away in the favour of the employee and you lose the case immediately. You'll then be required to pay whatever they claimed, no matter how ridiculous it may sound to you. You have no choice because you've got no records to prove otherwise. And they'll probably charge you a fine on top of that. And anyway, either way, it'll end up being a settlement of quite a substantial amount of dollars you have to pay, plus potentially some other legal costs as well. So it's something you want to try and avoid. So from day one, you start with a contract in place, follow that contract, put the staff members on the payroll system correctly, pay their allowances as they need to do, and you will never have a problem.
Yeah, so it's definitely worth setting this up properly from the get-go.
That's right.
Now, WorkSafe, I think a lot of people, and safe word for those who are outside of Victoria, it's not just a body that ensures people are safe, there's also a financial component and requirement.
Yeah, absolutely. So WorkSafe is a calculation, well, it's an insurance policy. So a staff member or even yourself under payroll gets injured on site, you're covered for insurance for anything that occurs in that situation. The challenge is, though, if you don't have WorkSafe in place, or the equivalent in other states, you are, as the employer, personally liable to anything that goes wrong. So this protects you and it protects your business by having it in place.
Yeah. Okay, Leave Plus, what's that mean?
So once again, any time you employ a staff member, there's an obligation to register with Leave Plus. It's quite unique to the building industry. Most other industries don't have this, but this is to pay for and allow for long service leave for staff. So that down the track they can claim long service leave after work for 10 years plus in the industry. So you have an obligation to register for it, and every quarter pay the equivalent of whatever that dollar value may be to that fund as a key responsibility every quarter. You can't avoid it, unfortunately.
Yeah, and we've talked about the paying super.
Paying super is always important, yes.
Yeah, okay. All right, so we talked about the software and the essential, like the requirement to have that to save a lot of pain later. So what does the software do in regards to payroll and monitoring?
Yeah, so look, every whatever your pay cycle may be, let's say it's weekly, you'd simply jump into the software and load in the hours of staff members' work, put any allowance in that may be applicable, and the system's going to calculate all that for you. It's going to calculate the gross wages, the tax is going to be deducted, what superannuation is, and what the net pay you pay your staff. Now, if you've got lots of staff, you can roll it up into a file and send it into the bank and pay send one transaction through your bank account, and the bank will send the payments out to all your staff for you. So you save a lot of time through that process. Really handy. But also, by using the software, which you need to do anyway, it also keeps track of the leave entitlements each staff member is allowed to have, like annual leave and sick leave. It allows you to record when they're taking a sick leave or annual leave day. And also when a staff member leaves, to pay out any unused annual leave. Sick leave is not payable, but annual leave is payable.
Yep, beautiful. So it's essential to have this in place rather than trying to fluff through your diary and look at when someone's had time off.
Absolutely, it makes it easier to do it. Use the software, it saves you lots of time. That's the simplest statement to put there. Yeah.
Okay, some critical dates, Grant.
Okay, we've talked about some of those already. Your BAS, we've said, is coming up due for the 26th of July if you're lodging your BAS yourself. That's your GST again. But if you're using a bookkeeper, you get another 28 days.
Yeah.
Other things you need to do, though, you need to finalise payroll end of year. It's quite a simple process in Xero. It's a step-by-step thing, but something needs to be done by the 14th. It's an obligation. Your leave plus your next payment to that fund is on the 14th of July. That's your long service leave component for staff. And superannuation must be paid no later than 28th of July for the employees. And tax again, as I said earlier, is the 31st of October 24.
Excellent. Okay, so we talked about, obviously there's a lot of risk when it comes to having your own business. And I think a preconception for somebody who doesn't understand what you do may perceive taking on a bookkeeper as a huge expense that can sort of blow them out of the water. And they go, well, I'm just not in a position to do that. I prefer to have my partner or my mum or whoever it is help me out. But one thing I really like about working with yourself, Grant, is the fact that people can be as hands-on or as hands-off as they like. And then based on the level of implication and the level of responsibility they hand over to you will indicate, obviously, what they pay. So it can be quite a good investment based on where they're at. So let's talk a little bit about some of these points that we've got here about cost effectiveness.
Yeah, I'll give you a little analogy. Not long ago, I had to have a home office built at home. Now, I'm pretty handy. I've come off a farm, so I know how to swing a hammer and a saw. But I know straight away, I don't know the legislation around building. And I certainly, if I did go ahead with all that work, I know it'd take me 2 or 3 or 4 times the amount of time to do the work. It's the same thing in the bookkeeping space. Bookkeepers, we are specialists in this space. We can do this work very quickly because it's what we do every day of the week. So we actually get the same job done in a much quicker period of time. So we bill based on the work effort involved. So therefore, for us, it's a less amount of hours, therefore less amount of cost. And as Nathan's saying, we'll work with you to work out what level of involvement you want to get involved with the account record keeping, which either means a higher bill or a lower bill, depending on how much you want to do yourself. So you're still always in the driver's seat for the engagement. So
even if you're a individual with one person you work with, or some bigger, more complex structures, which some of our members have, with multiple teams, different crews, you can adapt and find a way forward for them.
Absolutely. So each client has a different engagement. So we have a conversation, work through what you're most comfortable with, and it's never a hard locked-in situation. You may be on day one say, I want you to do all this stuff, and then day two say, no, what I'm now happy to take on some of these things. So we reduce the engagement, strip it back. That's a very good term. So you're always in the driver's seat. You're the buyer, so you're buying what you want in the engagement.
Yep, beautiful. Okay, so we've spoken a little bit about this, but there's various components that you can support people with.
Yeah, look, I think the key thing is now we've talked a lot about dates and obligations and all these risks and pitfalls and things that go wrong. Engaging us as a bookkeeper, or engage any bookkeeper, that's the role of a bookkeeper, to make sure you comply with all these things. We'll prompt you all the way through to make sure, hey, superannuation's due. You've got to want your work safe returned. Those things are all triggered as you go forward. So it's always a rather handy situation to have your bookkeeper in your hip pocket, because you don't have to worry about that aspect so much. But you need to listen to them. if we tell you something and you don't do it, guess what? It's still not going to get done. So it's very important you work with us through the process. But that's going to mean that these things won't get forgotten.
Yeah, and I think one thing I will add is something I mentioned a little bit earlier around Jake, our CEO, has worked directly with you in setting up the chart of accounts, because we want to be able to help you guys to be able to know where you stand and where you might be losing out or where you're at risk, so we can tighten those knobs and do whatever we need to do to adjust.
Yeah, that's a good comment too. Yeah. So that's talking about the profit and loss reports, which you can view that as often as you like throughout the year. So it's not a static thing once a year. It's the profit of the year. You should be able to look at that throughout the year, and by having us involved, those records are up to date all the time, so you can actually look and see how you're progressing.
Yep, and that's that last point there about your business performance, not just about ticking boxes, about making sure you're successful.
Exactly.
Okay, so as I mentioned at the very beginning, one thing that Grant's going to do is he is providing a gift to everyone who attends this webinar, either live or the recording, whereby you can have a discovery call to just have some open conversation and dialogue about where you're at. No obligation at all. Hopefully get some advice or some tips. And then if there's something you want to potentially engage Grant for, he's happy to help you with that. But thank you for watching. Thank you for jumping on. We hope this provides a lot of value for you and allows you to focus on what you do best and give you the confidence to stay in the industry for longer and to be successful. Thank you very much, Grant.
Pleasure, Nathan. Nice to see you all.
No worries. Thanks for watching.